Advisor Movements 20 August, brought to you by Zurich this week. So go to zoneeducation.com.au. I'm actually over in Kings Park, or virtually, West Perth, where one of our switches is from. So I'm standing in front of the War Memorial in the Botanic Gardens there. So straight to it, net advisors leaving the industry this week. We had 25 advisors leaving. Switch licensees 15 and joined was 0. So a bit of an uptick in advisors leaving this week from previous weeks. Again, we'll continue to monitor and determine whether we change our forecast for year end. Shout out to a couple of the switches. So Justin, this one's for you. I'm actually standing in your hometown. So moving from Integro to Capstone. Sharan from Garvan GWM to Capstone as well, and Corey Wassell starting his own license, so moving from Don Trapnell's Synchron to Verse. Top gains, again, new license, 2 new licenses, Verse and Nest Advisory Group. So three new advisors each there. Nest Advisory Group, 3 ex-AMP advisors or former AMP advisors joining that group. Lifespan Eugene's group, 2, and Doctors Wealth Management or Doctors Financial Services from the Avant Mutual Group gained 2, but fairly flat overall from the December 18 highs across the industry. Top losses, again, AMP continue to shed advisors, lost a net 7. Synchron up overall, but down 5 for the week. Charter, again, part of the AMP group, lost 5. Walker Wayland winding up their license, removing all 5 corporate authorised reps under their license, and State Plus, Deanne Stewart's group, net loss of 4. Now, one of the questions I did get asked during the week is, why do I raise the CEO's names or people who are part of the group? I guess, and is it relevant? And I'd say, well, highly relevant, I guess, in terms of how ASIC views that group. PI insurers, for example, will look at the executive teams in place when they're determining the insurance levels. You're looking at debt facilities and those sorts of things. You're always going to get debt providers looking at the executive teams, their current and past directorships and what they've done. So it's definitely something that should be on the advisor's radar when they are being recruited, is looking at the exec management team in place, because it can impact the license. It can impact what you actually achieve out of the group and what the strategy is from that group, but also externally from stakeholders. So for example, I know super funds look at these sorts of things when they're determining investments into groups, and or whether they're partnering with certain licensees or dealer groups, and the actual sort of executives that are looking after the business model. So, and I'd also encourage advisors to look at the other advisors within the group and their standing. So before switching and before selling as well to your client base. The quote of the week, well, it's really a statement that came out of NetWealth's report, and assigning this one to Matt Heine, with the legislated end to all grandfathered commissions on 31 December. NetWealth expects additional transition opportunities as advisors seek to provide their clients greater competitive pricing and functionality. I think we'll see that over the next 6 to 12 months is a lot of these, I guess, technology companies, supplier firms, training firms and the like, will need to step up and provide greater competitive cost advantages to retain advisors, especially as the regulatory landscape changes. But so that's my takeout for the week is Matt Heine. Again, a bit of a shout out to zoneeducation.com.au. That's it for the week. Relatively quick one. I'll see you again next week. Thanks.